we're not trying to build out traders who make $100,000 a year. If that is your goal, don't come here. That's not what we're here for. We're here to build out traders who make 7 figures and more. We just focused on training traders from scratch and giving them the best chance to succeed through training, through education and training. You can come to us and ask for more capital, and when you're here for a long time, you can get up to $20-30 million in capital to trade. On special situations, there are traders that can get up to $50 million on a special situation. When you're a prop trader, if you're down a couple $100,000, you don't think of it as, I've lost a couple $100,000 of my money. I don't think of it, it's not out of my bank account. It's a drawdown. It's a part of the process.
What if I told you that day trading can be a real job? You get paid to learn how to trade, you get to be trained by seasoned traders on Wall Street, and your boss will even give you capital to trade. Well, I'm not joking. I'm going to be visiting a very well-known proprietary trading firm here in New York City, SMB Capital. In this episode of the Humble Traders Podcast, we're going to learn from Mike Bella, the co-founder of SMB Capital, and Jeff Holden, the head of trader development at the firm. You're going to learn the comparison between prop firm trading and retail trading, what kind of mentorship they provide for traders, and valuable advice from these coaches who developed successful 7- and even 8-figure traders. Ready to learn with me today? Remember to hit the like button down below and join me on this very special conversation at SMB Capital. Let's go. Welcome to the Humble Trader Show. We have 2 very special guests today. Welcome, Mike and Jeff from SMB Capital.
Thank you.
Thank you for being on the show.
Thank you for coming to New York.
Oh, yeah. We're in Midtown Manhattan. You guys have a hella nice of a view here.
Yes, we are very fortunate and grateful.
Okay, Mike, everyone knows you as the co-founder of SMB Capital. So if you could tell us and our audience a little bit about where you got started, how you found trading, and how you founded SMB.
So I traded at a prop firm for a long period of time, and then I had this crazy idea that there was this, I don't know if it's a crazy idea, but I saw something, at least to me, that was so clear. There was this very clear need in the marketplace that for some reason, it just was very clear to me. And that was there needed to be better trader training for newer traders. That when I started, the market was a lot easier. Then the market was getting much more complicated, much more complex, and there wasn't this transition by firms to keep up with the training that was going to be necessary for new traders to make it, for new traders to have the best chance to succeed. There was just this huge gulf that was not being fulfilled. And I was just watching traders fail at a much higher rate than when I started.
Oh, okay.
And so, I don't know, in my head, it was just like so clear to me, we need to fix this problem. And if somebody fixes this problem, that could be a business, that somebody could grow a firm off of that idea. And so I just got in my head, and it was just so clear to me that I needed to do this, that this is something that I could do, that this is something that I would enjoy doing, that this would really work. And I just remember nobody else thought that. Lots of people around me, they did not see what I saw.
Right.
Lots of people I brought this up with did not believe that this was a very good idea. That I would just start this prop firm, essentially from my apartment or my trading desk at a firm, and build this new entity. All these other firms were established and had lots of resources that obviously I didn't have at the time. And so, but it was just so clear to me that I could just see these traders struggling. I could see way too many traders failing around me. And I could see the problem that firms and prop firms and retail traders and independent traders were having in this new market. And so When I share this idea, there was a lot of pushback. Even when I went to my now partner, Steve Spencer, I remember saying, hey, why don't we do this? Why don't we start a firm? And why don't we focus on training new traders? I remember him being like, can you just leave me alone? I just want to trade. Go back to your trading desk over there, leave me alone, and I'm going to go trade Apple. And so, but I don't know, it was just so obvious to me that this needed to be done.
So back then, a lot of the prop firms, that was on the street, they don't have a structured program to train the traders.
They had a training program that was outdated.
I see.
That was not keeping up with the changes in the marketplace, the complexity of the marketplace. And so I saw this opportunity that was there. And so I just started SMB Capital. I just started building the training and recruiting traders and working on the processes to train traders better. And I dragged Spencer along. Eventually, I coaxed him into helping me as well. And we just focused on training traders from scratch and giving them the best chance to succeed through training, through education and training, and working on that business model. And I remember doing every single job there is at the firm. I answered the phones, I answered the emails, I did all the training, we did all the trading, I did all the admin, I did all the back office stuff, everything. I did every single job at the same time.
Yeah, because that was the very beginning, just you and Steve.
Yeah, it was the very beginning.
How many years ago was that?
We started in 2005, the end of 2005.
Okay.
And I just look back on it, and I've been asked about this, and I think of it as really one of the stupidest ideas I've ever had in my life, to think that I could start a proprietary trading firm. I'm not sure how we ended up doing it. It was really hard. I don't know that I'd go back and work that hard ever again. But
it worked out.
It worked out, but it was not a great idea. It ended up working out, but
For sure.
I think I was naive about how hard it was going to be. It's been really hard. It was really hard, particularly at the beginning. The doubters had some good points, but eventually we figured out how to overcome everything and have some good luck and be able to attract some really great people. But the reason why it worked is because we really did just focus on solving this problem that existed in the marketplace and being totally right about that is a really good business model. Finding good people who really love to trade and training them really well and backing them and giving them resources, that is actually a really good business.
I see. Yeah, it must have worked out really well, because you guys have been doing this for 20 years now and have created some of the top traders that we see on social media. Yeah. So where did you step into SMB Capital? Like, what's your role here, Jeff? Shifting to you now.
Yeah. So probably the story of how I got here is a better story to start with.
Okay.
I got into trading. I had some interest in it. Had some people who taught me a little bit about it. And very early on, I realized, and one of the things that they taught me before I had done anything professionally, when I was just trading independently, was that you have to find an edge. And once you have an edge in the market, then you can actually have a shot of getting up that development curve. So the first thing that I learned was find an edge. And I found an edge, and I was trading it. And looking back now, it was like a very straightforward edge, but it was something that I was like, okay, this is great. I can see the path to being a successful trader. And as I was trading that very specific edge, it occurred to me as I started looking around and learning about other traders, how different it was trading one edge versus being able to trade 5 or 6 or 7 different unique edges. And how I would sit there and make 1 or 2 trades a day and felt pretty good about that. And that was nice. And then I'd read about somebody on social media that worked at a prop firm making, they were looking at 8 different stocks and trading 3 different edges that day. And it occurred to me that if I was really going to do this, I needed to do it with the right people around me And I really needed to challenge myself to see if I could put myself in a position to grow as a trader and as a person. So I was looking around and actually took the training that Bella had talked about developing. And that really opened my eyes to what trading could be. And about 6 months later, I had emailed Steve. I went in, and if they said in the training, do 1 playbook a day, I would do 2 playbooks a day. If they said, watch tape for 30 minutes, I'd watch it for an hour. Like, I just took it on myself to whatever they said to do in the training, I was going to do that plus more. And I was going to try and do that as well as I possibly could. And I posted a lot of things and sent Steve a bunch of emails. I think every day I sent him my daily review for like 6 months. Finally, I just emailed him and I said, hey, listen, I think I'm seeing some growth. I'm seeing some of these other edges that you guys are talking about, but I need to be there if I'm going to really be great. Yeah. He was nice enough to let me come in and interview. I met with Bella. I met with, a couple other people at the time and wound up with an offer at the firm. This was this is my 6th year. So
that's your official transition from retail to prop trading.
Yeah. And it really was about being around people who are finding unique edges in the market, not just one unique edge, but unique edges in the market, and having that adaptability to trade different markets. As Bella said, since I've been here, I think I've seen 3 or 4 different markets, big market regimes. We had extreme volatility during COVID. Yeah. We get pockets of that every once in a while. We had that grind up bull market before that. Then we had the bear market last year. And so we've seen these different transitions, and the ability to trade multiple edges gives you the opportunity to adjust your trading as a different market occurs. Yeah. That really was what drove me into being a prop trader. And then once I got in the door, it was like, the people here are amazing. Bella's right. The talent here is incredible, but more it's the type of people that really thrive and succeed here. They're just good people. They're really good people. They're the type of people you want to be around more. The type of people who are really going after something great. Yeah. And it kind of, had me more interested in wanting to get better and better and better. And then also looking around at the other traders, especially the junior traders, and seeing how could we help them get to a point where they could really help the senior traders grow. So there wasn't really a role, I don't think. It just sort of started evolving over time, particularly during COVID, when everybody was remote. It was like we weren't able to do the same check-ins. We weren't able to have the same conversations. And so I just started reaching out to some of the more junior traders that I knew, and some of them that I had even recruited. And we just set up weekly calls. And so we were talking about their progress. We were, really trying to help them realize the resources that were available, even if they were completely remote, of what's going on at other places at the firm. What are other people working on? When all that started to come together, then we started to come back into the office, and I guess this sort of trader development role organically kind of occurred. And so now I get to work with these people and these amazing traders that are at various points in their development curve on a more regular basis, which is really fun for me because I see what they're doing. And it's like, for a lot of them, when I was at that point in my trader development, if I was doing that, I feel like it would be a totally different experience for me. Yeah. And so I hope that, in a couple of years, as they continue down that curve, they're going to really shine and help take SMB to the next stage and the next level of our growth.
So let's take a step back. At a high level, what do you guys do here at SMB Capital for traders and in the trading industry?
So we trade stocks, we trade equities, we trade a little bit of futures. We trade as both discretionary traders, pushing the buttons, and as automated traders. And so when you come to a firm like SMB, you trade multiple products. You can trade in different ways. So there are some people out there that are purely discretionary. They just want to make up their own minds and push the buttons. Okay. That's a legacy way of making lots of money in markets, and there are still people that do that. There are people who we call hybrid. So they want to use discretion, but they want to use technology to alert them to very specific setups. So there are traders on our desk who aren't pushing any buttons unless technology fires off that, hey, this is a setup that is worth you looking at. This is a setup that's backed by data that is worth you taking. And then the other extreme are automated traders or quantitative traders. So rules in, rules out. You develop a particular strategy, you back test it, you forward test it, you run it live, and that's purely rule based. So traders can do that as well.
Okay, and you provide them the technology as either automated traders and quant traders here.
Yeah, so you have the technology and the capital to be able to do both.
Okay.
And by the way, people see that. So sometimes there may be independent traders out there who are they're very systematic in the way they think, and they start trading as discretionary traders. And there's some good in their trading, but there's a lot of bad, and the bad is way more negative than the good.
Yeah.
They're losing money.
The random trades, the setups.
And they're like, I'm smart, I don't get it. Like, I have some pretty good ideas here, but when we all put it all together, I'm losing money. And so some of those people are really better situated for being more systematic traders, for being more automated traders, for really diving into technology and only trading when there's certain conditions in marketplace. And so that is something that we see on the desk. There are people that, there are people on our desk who, if we only allow them the opportunity to be discretionary traders, they would fail.
Okay.
But if we give them the ability to use technology and be hybrid and or automated, they could be some of the highest earning traders at the firm. And so that's something to think about if you're an independent trader who's very systematic in your thinking, maybe had an engineering background, maybe had a really good math background, and you just can't figure out why you're not making money. Well, maybe it's the type of trading that you're doing, and maybe there's some resources that would really help you.
And one of the things that's interesting is we were actually in this room a couple days ago talking with one of our developing traders.
Yeah.
And he started out thinking that he just couldn't get up that curve as a purely discretionary trader. And as we were talking about his trading, and we've been observing his trading for a period of time, he started about 3 months ago to put some filters on his trades and then to track some statistics, essentially, to be able to create a structure around his thought process. In that time, we've seen this tremendous growth from him because he is just incorporating very simple systems to help support his decision making. So he doesn't have to come in every day and say, I'm going to trade this stock because I think it's going to go up or because I think this news is good. He's actually put together a structure so that he comes in every day and most of that work is done for him. And he just sits there and focuses on the pattern recognition part of that, which really plays to his strengths. So most of the deep thinking's already done, and he can sit back and he trusts his system and he has faith in it. And because of that, he's been able to scale up pretty quickly. You see him walking around with a different level of confidence than he had before, because before you could tell he knew that he was capable of making it as a trader, as an elite trader. But he just hadn't found the way to structure his edge in the way that worked naturally for him. And it's that balance between what naturally occurs in your brain and the way that you're composed as a person with the tools and the resources that are available to you. If you can match those two very well, that's where we see the fastest growth and development across the board, for whether they're purely quant traders, whether they're hybrid traders, or whether they're purely discretionary. If we can get that match of your personality with the resources that are available, you're really going to take advantage of those because it's just going to feel right.
Yeah.
And you see it. He's standing up tall when he walks around. He's jumping in, making good call outs on the desk. Like, it's great to see. It's fun for us to see.
So do you think, whether a trader is completely brand new and they enter the program here, or they start out as retail trading their own money and they join SMB Capital, do you think they definitely have an advantage here, to accelerate what they already know and to succeed better than they would retail? Like, what's the pros and cons of prop trading versus retail trading on your own?
You want me to handle that?
Yeah,
I may be a little biased.
Yeah.
Okay.
And look, there are very good independent traders out there. There are very good independent discretionary traders out there. We know that. If you want the best chance of success, I don't think necessarily everybody needs to go to a prop firm. But in today's markets, as complex and complicated and challenging as they are, I do think you need to follow the types of things that we do on a daily basis. And I think there are solutions for you to be able to do that as an independent trader, but I think you need to do them. So for instance, we're seeing people who are most successful on our desk in the present market being those who are super selective with their trades. Yeah. They are using data to back up that those trades truly do have an edge. They're not just pushing the buttons when they think they have an edge. That's not really working as much as it did in the past. They are a part of a team. They're getting ideas from other people. They are having their ideas stress test by other good traders on the team. They are getting more ideas from other traders on the team that they can incorporate into their trading. They are building technology with other teammates to alert them to good opportunities. And so, we're seeing why people are successful in this market, and our sense is that everyone needs to be doing that. Certainly easier to do at a prop firm because we have all of those resources here.
Yeah.
We have coaching and mentoring resources that quickly say to somebody, hey, why don't you stop doing that? You're not making any money when you do that. Like, why don't we just, let's sit in a room. Like, let's look at your trading stats when you do that. Because our observation is you're losing money when you do that. What if we just don't do that now for the next 60 days? What will happen? And lots of times the trader will realize I'm making money consistently again because I stopped doing that, which isn't in my self-interest. And so, there's a formula to making money in this marketplace. And whether you do it at your home or whether you do it here, I think you just got to follow it.
I think a big part of what you mentioned is also the accountability aspect. What do you guys provide here at SMB to keep the traders accountable that they have to follow certain rules, risks? What's the system like here?
Well, we have a risk manager, and he's the ultimate in accountability.
Okay.
You have nightmares when you start out getting your shoulder tapped by the risk manager.
Oh, no.
And then it happens. You get into a trade and it happens, and you realize that it's more of a conversation. It's really intimidating the first time it happens, and it does mess with your mind a touch. But
there's two types of accountability, right?
Correct.
And the risk manager is going to tap you on the shoulder for both. You're doing something that isn't in your self-interest. We've talked about this. The numbers show it's not in your self-interest. You're doing it again. So the risk manager will point that out to you. Yep. And the other thing is the risk manager will say to you, hey, you do this really, really well. You got to make sure that you're putting enough risk on for this particular trade.
I see.
The thing about our risk manager, who's great, is that the conversations are not confrontational. The risk manager is not there to say, you are a terrible person. I can't believe you're over your risk limits. Like, how could you be so? Those aren't the conversations. The risk manager is there to help you perform at your highest, and the risk manager has very good relationships with all of the traders, and the risk manager is trained really well how to talk to people who are on tilt and are pissed, and manage them properly so that there's a long-term relationship that's built.
But the other side of that is what you mentioned of a lot of traders have realized their best day because they've been pushed in the right time. Yeah. It's really this awesome relationship that gets developed between the risk manager and the trader, or even the teams, where you can feel it on the desk when it's a big opportunity for somebody. There's a different energy on the desk. An entire team is focused on a bigger opportunity, and they're having that conversation with the risk manager. They see it coming. They know it's going to be there, And so they're talking about kind of, all right, how are you going to execute on it? There's a system in place. It's not just, I'm going to trade this bigger, please let me go play. There's a whole system that goes into place. There are checks that they go through all the way through to make sure that they're allocating risk appropriately. They understand where, that trade's probably wrong and they really need to pare down the risk. So it's really this beautiful thing that Bella was mentioning of there is that other side of it too, where they can realize their best days, their best weeks, and their best months simply by being pushed.
Bedow yesterday made $10,000 on the open in an opening drive trade. He's on a team with Swang, who's one of the great traders that have come through the doors at SMB Capital. Okay. Hard to be better than him. And Swang immediately is talking to Bedow in real time saying, could you have been bigger? It's a $10,000 winning trade, great idea. Could you have been bigger? Swang made more than him on the particular idea. And then I didn't know, and then I went over and I was talking to Bedow, and apparently I said the same thing to him, which is, could you have been bigger? Like immediately our conversation is, great job. Yeah. Congratulations, you made $10,000 on a particular trade. All right, good idea. Do you think you could have been bigger? Where do you think you could have been bigger? And he actually in this case was like, I couldn't get the liquidity. He was automatically thinking about whether he really could. And reviewing his trade right away. Like that's the mentality that goes on at a prop firm, which is great that you had success, great that you made money. How could you have been better? Let's think about that. And we're all pushing you to think about that responsibly. We're not just saying get bigger. Yeah. We're saying get bigger responsibly.
I see.
Get bigger from what you do best.
Yeah, from the best setups that's in their data as well. So you touched upon, let's say that trader does make $10,000 and he wants to push further. Obviously, that requires them to have even more capital to trade with. How much money let's say for a new trader versus a pro trader here, how much money allocation do they have to trade with?
Do you want to answer that?
Why don't you answer?
I'll answer that.
You can answer from the money part, and then I'll talk about the daily risk number.
So you are evaluated every 2 weeks on your trading, and every 2 weeks you can request a risk bump and or a capital bump for your trading account. If you're having success and you think you can trade bigger in a particular strategy, you're going to ping the risk manager and you're going to say, hey, I want a 20% bump in this particular strategy. Here's why. Here are my numbers. And you'll create a business plan on that strategy with the risk manager. And then when you're doing well, you're continually talking to the risk manager, and then the risk manager will ask the partners, hey, is that okay? And a lot of times we'll say, sure. But we're constantly evaluating your trading. You can come to us and ask for more capital, and when you're here for a long time, you can get up to $20-30 million in capital to trade. On special situations, there are traders that can get up to $50 million on a special situation. So you have that ability to really put on a lot of risk and a lot of capital when you earn it.
Yeah.
But when we start out, we'll start traders, at a much lower number, and we'll focus more on their daily stop, right? And we'll focus on their daily stop, which is essentially, where you're stopped out on the day. We'll focus on that because when you're starting out, it's easy to think that you have edge in a couple different things. Yeah. It's easy to not realize how big of an edge you have in one thing and actually how small of an edge you have in another. And so you're going to bet essentially flat across all those various sizes of edge. It's something we've gotten away from pretty early on, but we still see it, right? So when you're trading 3 different setups, maybe you have edge in one and maybe you have extreme edge in one. And maybe you have a very small amount of edge in a second, and then you actually don't have edge in the third. Well, especially early on in traders' development, you'll see linear bet sizing across all 3 of those.
I see.
And then you'll see a flat P&L curve. And the reality is if you just bet really big on one and didn't bet on the other 2, you would be perfectly fine. So the risk number is going to start pretty low for traders until they can show, yes, I know how to bet responsibly, essentially. So a new developing trader on our desk just got his second or third risk bump, I think last week. And he had struggled for 3 or 4 months to get his first risk bump. And then it was just like boom, 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 like right after that. The only thing that changed was he really was betting much bigger in the spots where he had edge.
Yeah.
And
The best
really
setups.
almost not betting at all, like less than 5% of his daily stop, which is like an insanely small number in anything outside of his best setups. So we expect that he'll kind of continue to grow that bet sizing for those really good setups, and he'll keep that other bet sizing really, really small as he tries out new edges, as he looks for new edges. And it wouldn't be surprising over time for him to find a new edge, and then all of a sudden he's betting 2 strategies pretty big. And then the other ones stay really, really, really small. But that dynamic bet sizing is becoming way more important to us, especially early on in the development, because that's where people are getting the risk bumps the fastest, is when they're really efficient about their dynamic bet sizing.
Is that something you teach or train your traders on here? How to analyze all the data you have, how to know which ones to size in more, and how do you scale up eventually?
Yeah, Lance was really big at helping us get that concept and put structure around that concept when he started helping out the firm like a year and a half ago, I think, was when he came in. So Lance came in, and it's something we had always kind of known. And it's something we've seen our top traders do, where they bet really big, where they have edge, and really small everywhere else. We've needed to put a structure in place so that occurs across the firm. And so we will have conversations every month of where are you actually making money in your trading? Because sometimes you can get these outside variances in both directions, and it can cover up a lot. So we really are specific about our edges. And we really do track our specific edges. We'll use something like TraderView to be able to see specifically where am I making money? What types of catalysts and setups and then specific trades am I making money in? What style of trading am I making money? Am I scalping? And I'm always making money when I'm scalping. But then I'm losing when I'm trading big ideas. It might look like your P&L is like up to a little bit kind of, flat.
Yeah.
But the reality is you have so much edge when you're scalping that why don't you just scalp all the time? I feel like we have that conversation every month with somebody too.
Yes, I won't say who. But it's cultural, which is, look, when you come to a prop firm like SMB, we're not trying to build out, and I understand this is a lot of money for a lot of people, which is great, but just here, we're not trying to build out traders who make $100,000 a year. If that is your goal, don't come here. That's not what we're here for. We're here to build out traders who make 7 figures and more. That's why we have all of these resources. And so culturally, when we see a trader not put on the size that we think he should be putting on, that is an insult to our culture. And our culture is, be as good as you can be. And right there, while you did make money, were you as good as you can be? And you don't have to get there tomorrow, but you need to challenge yourself as to when you're actually going to get there and how.
There was this awesome comment in one of the monthly reviews that when you have edge in the market, when you have real edge in the market that you've back tested, you've studied, you have to be ruthless with the risk that you put on. Because you have to take full advantage of that edge.
Responsibly.
But yes,
Keyword
you have to be pushing yourself in that moment. You have to be challenging yourself. Because if you're not, and responsibly is very important, but
we're not saying trade big to trade big.
Correct.
We're saying trade big when you
see
have
that edge.
great edge.
When you have great edge, and that's really something that helps traders get up that curve and get that confidence and walk around, a little bit taller, and they're more engaged with other ideas because once you realize the potential of one edge and you really maximize it, then all the other edges that you've been studying, they kind of come up faster. And people, once you understand how to scale an edge too, that's a skill. And then you can apply that skill over and over and over to different sources of edge that maybe a junior trader is coming to you and saying, hey, listen, I've been studying this, or here's 5 examples of this trade. Hey, do you want to work on this together? And you're like, that I see that too. I've seen that. I understand it. Let's find the edge in that. If you already know how to scale that edge, you're going to help that junior trader develop, and they're going to help you find another edge. And that's a really exciting thing.
And I know you both touched upon scaling that risk, and obviously they're trading the firm's money. How much do your traders, how do they actually make their own money? How much do they get paid here?
Oh, okay.
How do they get paid as well?
You get a percentage of your profits. So depending on how well you do, you start at 50% and you can get bonused up to 65% if you do really well. So that's available for you.
That's a very, very nice structure, actually.
Yeah,
right?
it's
for traders who make 7 figures, 8 figures, like you said.
Yeah, and they aren't risking their own money.
Yeah, it's a firm's money.
And it's easier. I've traded my own money at times, and when you draw down at times, it's very different when, let's just say you lost $100,000 in a month, and it's your money. You look at that as, I just lost $100,000, and where I'm from, that still bothers me.
Yeah.
Okay, I lost 100. That's like it's out of my bank account. I lost $100,000. I'm thinking about that. When you're a prop trader, if you're down a couple $100,000, you don't think of it as I've lost a couple $100,000 of my money. I don't think of it. It's not out of my bank account. It's a drawdown. It's a part of the process, and you know that the bumps come, and that's okay. And so I think it's easier mentally to just say, all right, I'm going to just keep trading, and I'm sure I'll make that money back, and I'll continue to be able to trade big. If you've lost $100,000 of your own money, a lot of times the next periods of time you won't trade that big because you're fearful of losing more money. Yeah, in a prop firm, it's easier to just keep doing the same stuff.
And us at a firm here, let's say you do have a trader who is in a streak of drawdown.
We have some of this.
And how do you help them get over that?
Yeah, so it depends on the trader.
Yeah.
So we did very well in 20 and 21, and 22, the first part of 22. I mean, really, really well. That was a lot of fun. Traders performed extraordinarily. When the market changed, when the Fed started introducing rate hikes, there was a different market regime. And we tried really hard, really quickly to explain to traders that this was a new market regime and we needed to trade different strategies. What worked during 20 and 21 and parts of 22 was not now going to work in this new regime. We were going to have to short a little bit more, not buy pullbacks, that wasn't going to work, lean on our shorts a little bit more, and we thought the market would pull in significantly because of that. And so we had traders who had drawdowns because the market was different. They had been, just stars in that high volatility marketplace, but now in a interest rate environment that was rising with no clarity on when interest rates would stop rising, you had a completely different marketplace and a completely different market. And so you had to change your type of trading. And so we had traders who drew down. And so a couple of the traders who drew down, we needed to get them back to being consistent. And 2 traders I'm thinking about specifically, these traders, they drew down a lot. They drew down over 7 figures. And we actually had them start working with Lance on a very specific entry and exit system that would allow them to be more consistent with their trading. We changed the strategy. Like when people aren't doing well, we don't sit around and pat them on the shoulder and say things are going to get better.
No.
They're not going to get better unless they change.
They have to adapt.
They have to change what they're doing. They have to trade things with edge. Buying pullbacks where they made millions of dollars with in 20 and 21 and 22, now was not working. And so we pointed out, like, here are the very specific ways that you need to change. Here are the very specific entry and exit nuances that you need to adapt that we think will work for you, that you need to incorporate. And so we did with that. Some other trader I'm thinking about needed to stop trading options so much for lots of different reasons. But the secret sauce is getting guys to be taking the strategies that were working in this different market regime and not just do the same thing. Dr. Steenbarger wrote a great post about this recently, about how traders who are trading momentum and expecting to make money the way they did in other regimes are going to continue to lose money if they don't adapt, because when volatility is low, like it is now, or lower, like it is now, certain strategies just don't work as well. And you want to be more targeted if you're going to use those strategies at a minimum.
Yeah. So during these times where you are helping the traders who are struggling, we talked about risk bumps when they're doing well. Do you lower their risk when they are kind of trying to figure out new strategies to fit the current market environment?
Yeah, it's like starting anew. Just because you were a star trader in another market, you should prove that you're a good trader in this new market. I think one of the things that we could have done better at the firm was, in a theoretical environment, and sort of in the best case scenario, as soon as the Fed started raising rates, we should have just cut everybody's risk back to as if they were beginning traders. That would have actually been, from a firm's perspective, the right thing to do. And just say, this is a new market, prove your edge in this market, and let's build new businesses in that market. We didn't do that, and so some of the traders definitely drew down. I would do that differently if I could. But risks get cut, and there's more of an emphasis on being consistent again. There's certainly more help. We provide traders, like sometimes we have to provide amnesty. So sometimes the trader's down a lot of money, and they wouldn't necessarily make money until they made back all the money they were down. And we'll say to them, you know what, if you make money this month, we're not going to pay you out at above 50 or above, but we'll pay you out at 20%. And you will make some money as we're going along, and we'll work this off together. So we'll do things like that. But it's just be consistent, make money in this new market, find your edges, and we'll build from there.
You'll hear people talk about a drawdown playbook a lot. For a trader that's in a drawdown, they'll have a specific playbook, and it's really kind of
safer.
It's really focusing on what is my edge in this environment right now. And you'll see the specificity that occurs, because even though it's not your own money, we're on the desk to make money. We're on the desk to be competitive. We're on the desk because this is a place where the person next to you is a high performer and the other person next to you is a high performer. They're elite level performers. And the type of people that do well here just don't tolerate coming in and not performing well. You can't, it's just in your blood. You can't really tolerate coming in and not being at that level. So you'll figure out how to get that drawdown playbook in place, which is, I'm only going to focus on my very specific edges, the top trades for me that are working in this environment. And I'm only going to allocate risk to those. Once I get my rhythm back, once I get a feel for the tape, once I recognize that I'm trading with consistent edge again, then I can start to bring those other strategies back online. But you'll see that a lot, and you'll hear that discussion a lot for anybody that's in a drawdown. I'm just, I have to get to my drawdown playbook. And it is that like really specific version where you're just letting the market show you opportunity. You're showing up every day, you're still working the system, the process that you have for putting yourself in the best position possible to make money every single day. But you're just waiting for those really key moments that show up. And even as the market environment shift, those moments still tend to show up. We saw one even yesterday into today with the big gap. I mean, that was an environment, that's a playbook that not a lot of traders have been able to pull out for a period of time, but they were able to do that last night into today, which put them in a really good position coming into the day today.
Jeff, as a mentor here for a lot of traders here, what's your relationship like with them, working with them every single day?
Yeah, I shy away from the word mentor because we have team structures, and a lot of the traders are actually learning from senior traders on their team. What I get to do is work with traders, as traders, especially the developing traders. what we really want to do is by the time that this new developing trader comes through our doors and they go through their junior internship and they go through the senior internship and then they're in that new developing role, we want to see them start to grow. We want to see them hit that development curve and really accelerate through there so that by the time they get on a team, they can really add a lot of value to that team. They can have really good relationships with the other people on that team, even bring good ideas to a senior trader. So a lot of what I do is work with them early in their development career, right? They're early in their trajectory of growth and development. And it sounds simple, but a lot of what we do is focus on basic skill development. So when we talk about that, we talk about building systems, right? So I think Atomic Habits is a book that a lot of us have read. Yeah. And I think there's a quote in there that says you fall to the level of your systems, essentially. So what we're trying to do constantly is help traders develop systems so that they can show up every day and just focus on their process, focus on their system that they're executing. So a good example is this group of 3 developing traders that all of them just got assigned to teams or just started working with different teams. Before that, they had kind of needed a process in order to get to that point where they could earn the spot on a team. So in order to do that, we talked with them about, hey, when you come in every day, what's the first 5 things that you're doing? They started looking at that and they actually came up with a unique edge so they can start the day earlier in the morning and they can do 5 things that really matter to them before they even walk in the door. So it's really exciting for them. And from that, they were able to build a trading edge around that and then able to capitalize on it. And they've been able to scale that edge up as well, which is pretty exciting. Okay. So a lot of what we're focused on is really just building systems for each specific trader or even a small group of traders so they can just fall into a routine and really experience growth there. So, it's kind of a weird question to answer from that perspective because I don't think we view it as a one-on-one thing. It's much more of this is the culture that we have and let's help you work really well within that culture. We have some amazing resources at the firm. And if you're not utilizing them to the best of your abilities, let's help you get support and make sure you're taking advantage of the resources that are available.
And you also mentioned that these traders, especially the developing ones, they have a routine here. So do you mind sharing what that routine is like, generally speaking, for a developing trader?
Yeah, I think the best way to describe that would be what we expect, the routine, the system we create for our junior interns. Okay. So these are folks, a lot of junior interns already have been trading on their own before they even do a junior internship, or they have a strong interest in trading. I think when everybody started trading during COVID, now we have a much smaller percent of the population that's still trading, but it exposed so many people to trading and trading ideas and generating trade ideas. So that was an exciting thing because most of the folks coming in from a junior internship have been trading on their own. Okay. So they understand the basics of trading, but it's really creating a structure around that. So they'll start the day at 7:30. They'll get into the office 7:30, 8 at the latest. 8:45, we'll go into a trader development meeting and we'll talk through the specific things, the specific trade ideas we have on the day. And we'll cover it from the perspective of covering the catalyst, what's putting that stock in play, covering the setup that stock currently has. Usually that's a combination of the higher time frame and then even the lower time frame, technicals. And then we'll talk about the specific trades that they might see. So everybody that has a playbook, that is a specific set of trades that you might see. And a lot of times it's dependent on the catalyst and the setup that's going to lead to your trades.
I see.
So just by doing that, we've hopefully set them up for the opportunity to just show up and let the market, let the trades just kind of fall into your lap.
Oh, okay.
That's what we do before the open.
Yeah, that's kind of like pre-market planning every morning.
Yep, and it's very structured and it's gotten much better over the last couple of years. It was very good to begin with, but we've gotten better as we do more of it, as we focus more on it. Then from 9:30 to 11 o'clock, traders are trading, and they're most often connected with one of the teams here on Discord.
Okay.
They're on a call, they're talking through ideas, people are calling things out. It allows you to get that instant feedback of, is this a good trade? Is this not a good trade? Are you seeing what I'm seeing? Is my risk allocation too small or too much for this trade? Those little things, they matter a lot when you're trading. At 11 o'clock, we kind of get into a conference room and we do our 11 a.m. meeting. That's where we break down what we saw in the morning.
Yeah.
And then we also talk about what ideas might be setting up for the rest of the day. So, you're getting another touch point of feedback during the 11 a.m., especially for the developing traders, where it's, they came in and they said, I made this trade, maybe I made this mistake. And we talk through the process that they can implement immediately to not make that mistake again. Because we do everything with a sense of urgency.
Yeah.
And we define that as the number of times that you'll tolerate making the same mistake that matters to you.
Okay.
So if you come in and you make the same mistake 5 times, you're not acting with a sense of urgency to eliminate that mistake.
Yeah.
The best traders we see kind of allow it to happen twice. And by the second time, they've implemented something so that mistake shouldn't happen again, whether it's a technology solution or they've got an accountability buddy that's going to keep them in line, or they've worked with the risk manager to put special things on their account in order to prevent something from happening, or maybe they're undersized, right? So maybe they're undersized in a really good edge.
Yeah.
And this happened the other day, actually. There was a trader who was undersized in his edge, and he literally said to the trader next to me, next time I do that, I owe you lunch. And it's like, he knew he didn't want to let himself. And I know it hurt him so much to buy that other trader lunch.
Yeah.
And so I don't think he's going to let himself be undersized anymore. It's just one of those things of having that sense of urgency about correcting issues. After that, we kind of sit down and traders will either do some quant work or they'll pay attention depending on the volatility of the market.
Yeah.
And then later in the day, everybody's back on calls to trade the close. After the close, this routine gets really interesting. We see a lot of traders say that they're reviewing their trading and they'll talk about the things that they did well or the things that they did poorly. Our traders review their edges. And they focus a lot on their edges, and they focus a lot on their execution within their edges. So they're identifying, did I actually have edge in this trade that I took?
Yeah.
And what were the variables that allowed me to have edge in that trade? And then they're focused on their execution. And if there's a gap in the way that they expect to execute versus the way that they did, they again try and identify that, and they focus on that. And then they're sending out their daily report card to their mentor, whoever the senior trader is on the team, sending it out to other people at the firm. And then people are sometimes replying to those daily report cards saying, yeah, I saw that same thing, or I've been struggling with this problem too, let's work together or whatever. So it's really like this process that's so focused around edge at every point.
Yeah.
And it's so focused on using the resources that are available to you. The trader's responsibility is to have that sense of urgency, to make sure that they're taking advantage of the opportunity when it's presented to them.
Yeah, and you mentioned something about they're being put in teams and they have a mentor or a senior trader in the team. How do you facilitate that here to make sure everyone is in the right teams and they're actually utilizing all the resources, like you said?
Yeah, so senior traders are traders who typically made a lot of money.
Yeah.
They most often you'll hear the senior traders talk about why they want to be a senior trader because, when they're asked that question, why do you want to be a senior trader? Why don't you just want to be done trading or not work with anybody else? A lot of times it's because the junior traders are bringing good ideas to them and the junior traders are helping the senior traders develop even more. That's a big thing that happens on our desk where somebody's thinking about how can I make an extra $250,000 this year on a strategy that I didn't even know about a year ago.
Right.
So, when junior traders are helping senior traders recognize different opportunities that could exist, that allows that senior trader to really take advantage of it. So that's one element of it. But then also you'll see that everybody on our desk, for the most part, was grown because of the process that we have on the desk. So they want to kind of give back a little bit too. Yeah, okay. So the junior traders are very focused on trying to learn from somebody who's actually making money consistently. And the skills that they're learning are selectivity. The skills that they're learning are how to size up in the edges that are present. The skills that they're learning is how to stay out of drawdown, or if you're in drawdown, how to get out of that drawdown, how to go to that drawdown playbook quickly. Those are the sort of things that relationship are really about. It's a lot of fun to listen in on calls or be in on calls when everybody's enjoying their trading.
Yeah.
The energy's there. Everybody's having a good time. I was in a call, last Friday, and everybody was trading a really specific opportunity that they really, had studied and practiced. And just everybody's having fun trading. It was a really good call to be on at that time because this is a very intense job at times.
Yeah.
This is a very
High
intense
pressure.
pursuit. Yeah. And everybody knows that pressure of like wanting to perform better and needing to perform better. But it's kind of fun when you're with a group of people and you're just having fun trading. It really feels like the opportunities are just kind of falling into your lap and you're like, cool, I'll take advantage of that. Thank you for this. Oh, this is fun. And you're coming up with new ideas. So that relationship with the senior traders and the junior traders is really about just everybody doing things well together.
I think we also think about it as traders here are running their own business. Our job is, if there are serious people here running serious businesses. If you are a serious trader and you want to run a serious business, this is a great place for you to trade. Mm-hmm. And so when we think about traders running different businesses, we think about what needs do they have. So Dan G runs a terrific business. He is a team leader. He's got a bunch of traders on his team. He needs more ideas sent to him right now to improve his bandwidth. And so we'll see certain traders, junior traders, who for whatever reason, they're really good at idea generation. They're just shouting everything out. We've all seen some traders like that. Those traders are going to better gravitate towards Team Dan because they're filling a need that Dan has to improve his business. And then those junior traders are getting this opportunity to work with somebody who's just has tremendous process and diligence to building a trading business. We use the trading strategy and trading business we use interchangeably.
Okay.
So Dan's the best at helping people build a trading strategy that has edge. We might take Shark. We may notice Shark could use somebody who is really good at diving into data to give him more confidence that a particular idea will work. So we may identify somebody like that as an intern who could help Shark. And then obviously that person is going to get this amazing opportunity to be exposed to one of the great traders on the street and their edge. We may notice that Swang needs a little bit of help covering some of the China names, which he likes to trade. We may pick up that a particular intern is very well versed in that area and move the two of them together. So the idea is, how do we help every trader here build a better business? And what are the things they need?
Mm-hmm. And they all need to be able to give and receive in really positive ways in the teams.
Yes, junior traders have a lot to give to a senior trader.
Yeah.
Senior traders can get a lot from junior traders. And then obviously, I mean, what an opportunity to sit at a desk and hear everything a senior trader is trading in real time, see all of their entries, all of their exits, listen to why they're entering, why they're exiting in real time from a guy who's made, some of the guys have made near $20 million in multiple trading years, or seven-figure a year traders. To have that opportunity really speeds up the learning curve, is an opportunity you don't get at a lot of places.
So how can someone interested who's a retail trader listening to this podcast right now, how can they join SMB Capital? How do they apply?
SMBcap.com/careers.
Okay.
It's really straightforward. We have our application up there.
For the internship program or
junior internship, yeah.
Okay.
We recruit almost exclusively for our desk through this junior internship program, and then senior internship, and then they become new developing traders. We implemented that, I think, 3 or 4 years ago. Yeah, just during COVID, we implemented it. We started with junior internship. We used to just have one internship, and then you were a new developing trader. We changed things up a little bit, and we started with the junior internship because the junior internship, you're trading on demo. People call them funny money or whatever you want to call it, but it's essentially a demo account, right? And it's a 3-month internship, and or 2 months in the summer, but 3 months for anybody else that's doing it. You're exposed to the desk and the way that we do things. And the reason why we created that was because we realized that the structure that we have in place is something that works for us, and it produces the trading results that our traders are generating.
Yeah.
But it's not going to work for everybody, and we're totally okay with that. So we created this junior internship so that we can kind of give people that want to take advantage of the opportunities that we're presenting that chance.
Yeah.
They can step in and they can do everything they can to be successful as a junior intern.
Okay.
The traders that do that then move on to the senior internship. And during the senior internship, you're actually trading live capital.
Okay.
You're usually getting more exposure to different teams. Typically, it's a senior internship and not just a new developing trader, because when traders are trading live capital, sometimes they find that it's really not for them. Maybe they don't have the risk appetite.
Yeah.
Maybe they thought that they could do it, but they just really aren't seeing it from themselves. So that little senior internship has actually been a really big help for traders to find, you know what, this isn't for me. And
I see.
And for traders that come in the junior internship and they realize it's not for them, that's fine.
Yeah.
For traders that are in the senior internship, realize it's not for them, totally respect that. We've actually had some senior traders senior interns that have gone to do like really amazing things at other firms. They found that intraday trading wasn't for them, but they've gone and worked at different funds, or they're working at actually some really impressive places now. But intraday trading really wasn't for them.
It's not for everyone. It's
not for everyone, and that's okay. Yeah. Because for us, for the people that love intraday trading, love focusing on edge, you know, we are here to do something great. And it's really tough to do that when you're surrounded by people who are just kind of have a passing interest in it, who aren't really sure that it's for them.
Yeah.
So,
and how long do they spend in a senior internship?
For the summer internship, that's 2 months, and for anybody else, that's 3 months.
Oh,
yep.
okay. I see.
So most of our recruiting comes from between sophomore and junior year in college, you'll do a junior internship. And then between junior and senior year in college, you'll do a senior internship. There are folks that are independent traders that can apply, and they'll earn the opportunity to get a junior internship and then a senior internship through their application alone. We're always looking for people that are showing that trading interest. But the threshold's a little bit higher for those traders than it is for somebody who's a sophomore in college and looking to do a junior internship with us.
What do you mean the threshold's a little bit different?
Our expectations. Mainly because, you know, if you're in college, we expect that you're going to enjoy being in college. If you've already graduated,
yeah, that makes sense.
You kind of have to really have your foot in the ground and be ready to go quickly.
Okay.
You know, you said something interesting. I think I'd like to highlight one point that you made. So, look, lots of people who are independent traders, or maybe even a prop firm traders like here, they try and become successful traders and they don't make it. We find that if you position yourself in the right way, that even if you don't make it as a prop trader, or even if you don't make it as a retail trader and you've given it a decent amount of time, there are a lot of skills that are transferable to other really good jobs in finance. And so we just had a trader who was with us for a year and recognized, hey, this wasn't for him. Active trading wasn't for him. And he ended up getting an amazing job at another trading desk for, you know, a tier one firm, like a top-notch firm, doing a different type of trading. We had one of our interns ended up recognizing during a senior internship that this type of trading wasn't for him, and he got an amazing job. But one of the things that is a real part of what we do here is if people, for whatever reason, are not making enough money or this isn't for them, you know, we take pretty seriously our responsibility to help them transition into something else. And there are a lot of people, it's okay to not be suited to be an active trader. Like that's not really necessarily a failure.
Yeah.
Trading is the hardest thing in finance. Discretionary trading is the hardest thing to do in finance. Choosing direction is the single hardest thing there is in all of finance. And to have done that for a significant period of time and to have had that experience, there are a lot of other people in finance who want to hire you because you tried to do the hardest thing. Maybe that hardest thing wasn't for you, but there's lots of other things that maybe we'd like to talk to you about. You know, we've had traders get hired at global macro funds who were just terrible active traders. They're just terrible.
Amazing at research.
But they're great, yeah.
And they're really good at idea generation.
Great. It's just not the type of trading we do, and so I don't know that it's always a failure if you don't make money as an active trader. If you just sort of look around, there's probably some other stuff you can do.
So from the senior internship program, how do you select the traders you do want to bring onto the firm?
I mean,
we have a scorecard.
We have a scorecard.
Oh, okay.
So, you know,
you're being evaluated. I think one of the things that Jeff has really implemented during our internships is every meeting that we have is an opportunity for you to compete.
Okay.
During our AM meeting, you have an opportunity to present the very best trading idea of the day. During our 11 a.m. meeting, you have an opportunity to present the very best idea for us to be thinking about going forward or the very best trade setup from the morning. You have all of these touch points with us where you show us that you're competing and that you're doing well, that you're showing excellence. And we're keeping notes on that during all of those times.
Yeah.
And the people that do the best, that compete the best, are the people most likely to be hired.
So having good ideas, having being willing to share those ideas, and what about their actual P&L during their senior internship?
It's tough because we don't really, we pay attention to it at times.
Yeah.
And we use it more as like a lighthouse, like a beacon.
Okay.
You know, if somebody's kind of trending in one direction, we can see it in their P&L. The reality is their P&L is probably a little bit of a lagging metric to the scorecard during their senior internship.
Interesting.
Because if they're not scoring relatively high in the AM meeting, the 11 a.m. meeting, their playbooks, reading the tape that we teach them, we haven't really seen many traders who don't score high in those come in and put up really big, consistent P&L. So it's almost like, you know, the scorecard has been the leading metric where the P&L is a little bit of a lagging metric. And why I say that is traders that have changed their scorecard, you know, maybe they started out in the first 2 weeks, they weren't really scoring very high. And then all of a sudden, week 2, just it clicked for them. Yeah. They recognize, no, I'm here to work. I'm here to compete. And week 3, 4, and 5, they have some of the best scores of anybody. And this happened last summer. We had a trader who came in, was trading live capital.
Yeah.
Week 1 and 2, his scores were like low, and we share the scores. It's not like we keep them private. We have open discussions about here's where you are, here's where the scores are, here's how we think you might be able to improve your scores. Yeah. And the traders that want to take it upon themselves to improve their scores, and they start doing it, it's like it takes a week or 2, but then their P&L starts to catch up. Oh, so it's really interesting how it just kind of goes hand in hand. So I can't say that we really paid that much attention to the P&L, but our experience has shown us that that's typically what happens.
I pulled up the 11 attributes that you graded on. Only one of them is performance.
Oh, okay. So the rest is sort of how much they prep, how much they share, and how they do in a team environment. Okay, very interesting. So theoretically, someone could be, you know, maybe flat with a P&L, but they score high on everything else. They can still be considered and hired. That's very good to hear. Yeah.
We've actually seen traders who are that way for, you know, we try and when we see somebody doing great work, right? Yeah. We talked about it before. Our culture is we want to be surrounded by people doing something great. We have a banner up on the wall or a mural up on the wall. Dr. Steenbarger's great quote, which is, you were meant to do something great. right? I think that really embodies everything we do here.
Yeah.
And so when you see people doing something great, if their P&L is going to take a little bit of time to catch up, that's okay here. You know, it's not the same in the retail space where you do need to, or as an independent trader, where you do actually need to put up P&L right away. That's how you stay a trader.
Yeah.
Here you have a little bit of runway to let that P&L catch up, which what we've seen is if you're performing well on the scorecard on those attributes, your P&L should catch up.
Yeah.
We know it when we see it, and what's interesting is there are a lot of people who think they want to be a trader, and sometimes they learn that they don't really want to be a trader, but it's pretty easy for us to notice the people who really want to be a trader. And so lots of people say, one of the things you need to do to be a trader is you have to work really hard. The way I look at it is, if you really love something, you're going to do the things that go into being good at it.
Yeah.
And so last night my son had baseball practice. He came home. He said, "Dad, can I go down to the playroom and can I hit off the tee for another 30 minutes?" My son loves baseball. Like, I didn't have to tell him to go hit for another 30 minutes. When we say, hey, you should dive through some data to figure out whether or not you have edge in a particular strategy, the people that love trading are going to do that work, and they're going to do it really well and really fast and really consistently because they love trading.
Yeah.
The people that don't, you know, maybe there's something else they really love, or maybe there's a different type of trading they really love. I think that's okay to learn that.
For people who are struggling and who are not doing as well, you know, like you said, not everyone needs to succeed as a trader. Not everyone can. So is there, like, how do you gauge?
Definitely not everyone needs to succeed as a trader.
So at what point do you, how many months, or what does the trajectory of the P&L has to look like for you to decide, okay, this trader in particular, trading is not for him. SMB is not for him.
You should be improving after a year. So by the end of the first year, you should be starting to show improvement in your P&L. And you should have been doing the work that goes into being pretty good along the way.
Yeah.
If you're doing that, we're going to give you another year. We're going to pay you. We're going to give you all the support you need, and you can just focus on trading while you're learning. You know, after the end, or if at the end of the second year, you're not making money, that's not good for you, and that's not good for the firm. And we're going to help you transition into something else.
I see. So the traders, they still get paid a salary, like a base salary. Oh, okay. You guys are nice. Okay.
We learned over the years that we want people to just focus on learning, and one of the biggest reasons why traders fail is they don't have enough time, and so, or they can't give it enough attention. And so if you have to go figure out how to make money,
pay rent,
while you're learning, that's not conducive to you giving this your best shot. You know, we've seen multiple guys make near $20 million in a single year, multiple times, and lots of guys who make seven figures.
So is it safe to say, you know, it's generally for traders who enter here, they go through a training program. It takes them about a year to 2 years to kind of start scaling up, to see that trajectory.
Yeah, everybody's different. Max is somebody who is really good in year one. I don't know if you met Max at Traders for a Cause, but he's probably the fastest trader I saw do that.
Yeah.
I'm thinking of one of our traders who's made close to 20 million a couple of years. It was the end of year 2. He actually didn't do very much until the end of year 2. A couple other traders I'm thinking of who were, you know, top traders, made almost 20 million bucks in back-to-back years. They were consistent by the end of year 1, but not necessarily making a ton of money.
Yeah.
But a good trader by the end of year 1 should start, historically, will start to show consistent profitability.
And the inputs on that are things like every day they're studying what are the little things that they could have done better.
Yeah.
And the next day, you know, that day they'll write in their daily report card. Lance talks about the DRC exercise. We do it on our desk. that night in their DRC, they're sketching out the outline for what they need to do to fix that little thing that they recognize that they could improve on. Mm-hmm. The next day, they already are coming in with those steps implemented. We're seeing that consistently. And you think about that happening on 252 roughly trading days a year. You're getting that little bit better every single time. And every single opportunity that the market presents to you, you're studying, how could I have done that a little bit better? How could I have been a little bit bigger in my best setups? How could I have stayed away from something that kind of trapped me a little bit?
Yeah.
How could I stay away from, something that I really should stay away from that took away my focus from the opportunity that I really should have been looking at. Yeah. They're coming up with solutions for that with a sense of urgency that is really cool to see. So they're getting better every single day. They're not just writing, I wish I got better at this. I really need to get better at this. And then coming back a week later and saying, I remember I really need to get better at that again. They're actually implementing it right away. And so by the end of year one, it's this natural thing that's actually just caught up to the work that they're doing.
So you guys help them transition to that point, provide them the resources, the mentors, the technology, and most importantly, the time for these traders to develop.
Yeah, time. That's a good observation.
Yeah.
Having time is really helpful, and not all independent traders, retail traders, really do have the time that a prop firm can offer you.
Okay. Any messages you want to tell our viewers watching this?
Be resourceful.
Yeah.
Honestly, the thing that's the most exciting for me about being on the desk is every day you come in and you're talking with somebody about a trade idea or a potential source of edge in the market. Traders on our desk are being resourceful with everything that they can be to help them explore that trading edge. And what's available to retail traders is actually exceptionally good for the most part. We're lucky to be surrounded by people who are studying how to use those resources, so we're using them in a very effective way. But even as a retail trader, as an independent trader, you have access to a lot of those same resources. So if you use them, if you go out and find solutions to the problem and use the resources, that's a great place to start. And then find a community, because it's a lot more fun when you're trading in a group, when you're trading with other people. It's there's something special about making money in markets. It feels really good, but when you're doing that with your friends, it's a lot more fun.
For sure.
If you're going to do something, you should try and do it at the highest level you possibly can. And the guys who've made tons of money out there, that's where the real fun is.
Yeah.
You don't want to be, if I did have a message for, nobody asked me, but if I did have a message for independent and retail traders, I would say, the point of this is to find out how good you can be. And there are probably people out there listening who could make 500% more if they had access to more resources, if they had access to more capital and proprietary technology and senior traders who have a lot of edge and coaching and mentoring and multiple products.
Yeah.
They may be leaving not just a lot of money on the table, but them experiencing how good they can be. And that's why we do this job, is to challenge ourselves and find out what that answer is.
Thank you, guys. Thank you so much for your time.
Thanks, Shay.
Thank you.
There are so many key takeaways and practical trading tips that are shared in this conversation today. Whether you decide to trade as a retail trader or a prop firm trader, the formula to success is very similar. Be resourceful, find a group of like-minded traders, and create systems that will allow you to follow your strategies and execute with proper risk management in mind. Feel free to share your thoughts about prop firm trading or retail trading down below in the comment section, including any questions you may have. If you want to listen to even more conversations with pro traders, you can check out this playlist over here.